Time now for an in-depth look at the market news today, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thanks for making time today.
Thank you very much for having me today.
Now, we've got all these issues in trade and a slowdown in the global economy, but the three main indexes on Wall Street are at all-time highs. Where are we now, and what's your outlook in the near term?
Sure. As you said, Dow, S&P, and Nasdaq are all breaking the record highs. If you look at the Dow, it was up 0.42% yesterday. S&P was up 0.37%. Nasdaq is up 0.56%. The small cap indices, Russell 2000 is also up 0.67%. Not just the U.S. market, the various emerging markets are also rallying, breaking the record highs. Vietnam and other various countries are breaking its highs. In terms of the why this kind of rally is happening, clearly this is because of higher liquidity that is bidding into the equity market performance. Interest rate environments are very low. As you know, that all the countries, including Europe, U.S., and various other countries are lowering interest rate and pumping the liquidity into the system. So clearly this is making the overall equity market to rally continuously. But in terms of the valuation-wise, people might be worried because a lot of these indices are record high-level P multiples. But I'm saying that that's not really a problem yet because of the historical highs versus current level is still reasonably okay. If you look at the fear and greed index for U.S., it is hitting highs around 86 territories. Once that hits above 80, we need to be cautious. So we are saying that in a short-term basis, market might make some breather and take some time to rest a bit. But in terms of medium term, we think that the rally should continue because the global economy is in a situation where we are not going to see any economic recession while the interest rates are remaining low and the incomes are rising in a steady speed. All that means is that the current stage is where we are at goldilocks phase. So therefore, equity markets should do well in terms of the valuation. And rather than looking at P multiple, we need to look at PBR, and it looks interestingly attractive if we are able to keep the current return on equity level.
Right. Well, it's been a good week so far for Korean stocks, too. The Kospi and the Kosdaq both higher today. What's the story there?
Yes, as you said, Kospi is up another 0.58% today. Kosdaq is up another 0.56%. The key factor that we are looking at is what's happening to the manufacturing industry, particularly the DRAM semiconductor industries. Most of the people are saying that the turnaround is coming, most likely in the fourth quarter and going into next year. 5G demand and the pickup on the overall fourth industrial revolution related demand related IT sector should be quite strong. If that's the case, then the earnings turnaround is likely. If you look at the overall earnings growth rate, we had seen a quite significant drop of earnings in 2019 by about 30% plus year on year. But looking into the third quarter results and going into the fourth quarter, Q-on-Q numbers are bottoming out. So estimation is that Kospi will show earnings growth rate of close to 20% next year. If that is correct, then yes, the market can do additional run in the future. But we're not sure whether that kind of strong growth in earnings will happen immediately. And also the overall the dividend yield territory is not that high. So therefore, we think that Korean equity market can do additional run, but in terms of the performance-wise for the next 6 months to 12 months, it might not be as strong as some other market that we like.
Got it. Well, of course, a big story today, 15 countries, including Korea, concluding negotiations on RCEP, which could be the world's biggest trade deal. What might this do for the Korean economy?
Well, in terms of the impact on Korean economy, everybody's saying it is positive news. I look at it as whether or not this is something that the Asian country can do, despite all the concern that's happening amongst the global economies, because of the protectionism that's been introduced by various countries. As you said, the 15 countries joined on Monday in agreeing in terms of the free trade. As you know, the Sino-U.S. trade war and the rising protectionism is giving a huge burden for the economic growth rate. If the Asian countries are coming together, which is 1/3 of the global economy, that means that is definitely positive news, despite all the negative news that flows that came through. However, unfortunately, India did not join this RCEP. Because they're saying that it is not necessarily good for its farmers, businesses, and workers and consumers. Of course, they left the door open for India to potentially join them later, but at the current stage, it's a little bit disappointing that India did not join. But nevertheless, we are seeing some negotiation will be happening in a positive direction, particularly as U.S., China, Korea are all in it, and that should, including Japan as well. So the dispute between Korea and Japan has been quite negative in the past, but overall, because of this RCEP, we think that the trend itself should be turning into the positive directions.
All right, Mr. Yu, that's where we'll have to leave it today. Again, we appreciate your insights.
Thank you very much.